What's happening, Octo family? We got some late night news that just rolled on in by Nabila Ahmed, Liana Baker, and Scott Moritz. Bloomberg, a blank check company backed by former Citigroup Inc. rainmaker, making it rain, Michael Klein, not lately, right, is among the parties interested in buying a stake in AT&T's Inc. DirecTV satellite television business, according to people with knowledge of the matter. Churchill Capital 4, which raised $2.07 billion in July, is working with advisors on potential bid for the asset. The people said, asking not to be identified because the discussions are private. AT&T has been seeking investors to buy a significant stake in the business, allowing the telecom and media giant to remove DirecTV from its books while maintaining access to some of its cash flow. Private equity firm Apollo Global Management Inc. is also continuing discussions with AT&T, which is looking to announce a transaction before the end of the year, the people said. DirecTV is expected to be valued around $15 billion in a deal, the people said. That is a fraction of the $48.5 billion AT&T agreed to pay for it in 2014. The price tag includes debt. The price tag included debt then, which was $67.1 billion. That's it. No final decision has been made, and AT&T could opt to not proceed with any potential transaction, the people said. So this is still speculation. Representatives for AT&T and Apollo declined to comment. Klein couldn't immediately be reached for comment. Klein, Churchill Capital's chief executive officer, has been one of the busiest SPAC dealmakers, with 3 of his blank check companies announcing mergers in the past 2 years, which sucked. Last month, the educational technology company Global Knowledge Training LLC and Skillsoft Limited agreed to merge with and go public through Churchill Capital Corp. Second, he's previously shown an interest in media assets and considered buying Univision Communications Inc. this year. Instead, former Viacom CFO Wade Davis agreed in February to buy a majority stake in the Spanish language broadcaster. After years of growing through acquisitions, AT&T is culling assets under the new CEO John Stankey and it faces pressure from activist investor Elliott Management Group. Okay, so sounds like AT&T is stuck with some bags that they paid too much for. AT&T has been pushing, I think this is what they always try to sell me, it's DirecTV. I'm a never pay for cable type of guy. I always like the stuff on regular Fox and ABC, Tim the Toolman stuff, Boy Meets World. Other than that, I've never been in. I've been a movie guy, right? So I don't know much about DirecTV at all. Do you guys know? What is it? DirecTV. I know it's probably like a bunch of channels. It seems like. Is it cable or is it satellite? Do they still have satellite? I don't know. But regardless, it sounds like to me that AT&T bought it for a lot, and now they're valuing it at only $15 billion instead of the $48 that they paid 6 years ago. That's not good because I know they've been aggressively growing it. I know some people that have done well in AT&T through DirecTV. So I'm surprised that it's gone down. So obviously something's wrong, or maybe this figure is totally wrong. Maybe they missed a number in there, or they meant to put 45 billion, 35 billion. It's crazy numbers. I don't know. If those are the real numbers, though, that doesn't look good on paper. And that's what it looks like. And then Klein's coming and saying, we'll take it. We were hoping, of course, that this was going to be lucid with Mr. Klein and all his direct relations with them, but this just sounded like that might not be the deal. But the last SPAC by them didn't go through for Topgolf, so you never know. This one could not go through. Regardless, I think we're going to see probably a pop tomorrow, at least in the warrants, maybe a little bit in the comments. We'll have to see. Just protect yourself. I want y'all to know this. Y'all have a good rest tonight. Take care.